right, everyone, welcome back to the channel. Thank you for tuning in to another video. All right, so maybe you're someone that's really starting out looking for a solid strategy that you can trade into 2024, okay? This is going to be a simple guide for any beginner trader, intermediate, don't even care if you're an experienced level trader that's maybe possibly even looking for another strategy to trade, okay? This video is just going to give you a rundown of a quick strategy that I use in my own personal trading surrounding supply and demand. And look, this thing is game changing. It will change your life if you know how to trade it correctly. You know, I have tons of videos that go over the strategy and how I trade it. We have a full-on Discord community where plenty of community members are over there that trade similar to the way I do, have watched the videos, picked up on the style of how I trade, and incorporated it into their own trading world and are doing phenomenal. Lots of them are passing their own evaluations with these prop firms. Now, I don't trade with prop firms, but I don't diss any of them. I don't talk about them. I don't really go into detail. So, and I don't know which ones are better than the others. So you have to kind of pick and choose your own guys. So, but there are tons of individuals that do trade using prop firms. So if you're interested in asking questions like that, you can join us on the Discord. Find that link down in the description portion of the video and just come join us as a whole, because we have a team of great traders that can as well share valuable information with you and even attest to the strategy itself. You can come over and say, hey, does the strategy work? How well does it work? Are you profitable using that? I will allow those individuals to share their own testimonies with you, okay? They've already shared positive comments across the YouTube platform or channel here, as well as over in the Discord. And it's just me. I'm just here to share with you my style of trade and my experience, how I do it each and every day, because it's really not that hard if you can just really focus in and narrow down in on one solid strategy and make it work for you into this new year. Now, I'm going to show you a couple of examples, and I'm just going to kind of quickly give you a overall simple guide again as to how I trade supply and demand. It's all about looking for zones, okay? Looking for high probability zones at a higher time frame or a higher base chart, because I don't trade time-based charts. I trade range-based charts. And before you go on to ask why, it's a simple answer. There's no overthinking involved into it. It's just the fact is it's clear to the eye. I will tell you this: there are been plenty of traders that have said, "Thank you, Mike, for showing me and introducing me to range charts over, because maybe they were trading time-based charts." Again, I'm not knocking any specific style chart, whether it's tick or volume, but they just love the idea of seeing and understanding range-based charts, because there's so many opportunities that unfold on a range-based chart to where maybe on a time-based chart you want to maybe get one or two a day. Just depends on the market you trade. So let's talk a little bit about the strategy, how it works. But first and foremost, you must understand market structure, all right? If you don't pick it up and grasp it, or, I'm not an educator, guys. I'm going to tell you that now. These videos are simply for pure entertainment purposes, but a lot of people have commented and said, thank you for being such a great teacher or educator, even a mentor. I'm none of those personally, okay, to myself, all right? But I thank everyone out there that has left those positive comments. Again, I'm just here to share my way of doing it, how I've been doing it for years, and how successful it has been for me. But first and foremost, starting off, I want to say this also. People always ask me how, or is there an additional course or platform to where I share additional information. Look, through YouTube, they offer what's called the YouTube tier membership program, and I've set up two tiers. There's the loyal channel supporter tier and the elite channel membership tier, okay, or elite channel supporter tier. The elite channel supporter tier is where you get the trade breakdown. So if you're interested in getting additional content, meaning the trade breakdowns are a series of videos, okay, that I post. It's not daily. Maybe I'm trying to get back to doing it weekly. It's to where I, go into detail about trades that I've taken, so that you can grasp an understanding why I took that trade. All right. And lots of individuals have lots of individuals have traders have signed up for that. It's $6.99 a month. There's a lot of added value there. Again, it's the trade breakdowns to where I go into in depth. Okay, it's as if you're sitting right next to me and I'm covering my mind thoughts, my mindset, the thoughts that go into looking for setups, the thought that why I took a specific trade, breaking it down so that people can understand and grasp, even from an elementary standpoint, because I know a lot of people trade, learn at different levels, okay? So, but I don't want to go into great detail about that. If you're interested in becoming an elite channel member or supporter, click on the join button right here on this video. It's next to the, I think, the share or download. Or there's also a link that can be found in the description portion of the video underneath the Discord. The Discord link is there too. The Discord is free. Okay, come over and join us on the Discord. But if you're interested in becoming an elite channel member for $6.99 a month, not a day, okay, not a week, it's monthly, to gain access to the video playlist, which is a hand-selected list of videos that I pulled from the over 600 videos here on the channel. The ones that I feel like cover the hardcore content that go into great depth of the strategy and how it's traded, as well as plenty of other informational or valuable content videos, and the trade breakdowns. Click on that link down in the description portion of the video. Without further ado, let's go ahead and get into this guide that I'm talking about. Just going to kind of give you a quick synopsis of how I do this and what to really look for. First and foremost, you've got to be able to follow market structure, okay? We're looking here at a chart of my higher time frame that I use to mark off either supply or demand zones, okay? You can also use a 24 range. I share that. I talk about that. A lot of traders use it in their own trading, just looking for multiple chart confluence, okay? The more confluence you have across a series of charts, the better off, the more high probability, the better the trade is going to work in your favor. All right, so what we have here, just show you quick examples. The market's making higher highs and higher lows. Breaking structure to the upside, all right? That's the key to it. As long as the market is moving higher and breaking structure to the upside, push up, pull back, break structure, push up, pull back, break structure. You can look for key areas of demand in situations like this to trade from, okay? If you do not know, or it's your first time hearing about supply and demand, please watch some of the videos here on the channel. You don't have to learn it from me, but a lot of people stick to and grasp the information on this channel because it has worked for them. All right, so we see the market moving higher, breaking structure to the upside, okay? Was this an area of demand right here? Yes, it was. We had a pullback, a breaking structure, and this is just following the structure of the market as it's moving higher. Now, what happens when the market gets back here, I don't take my trades. If I was to mark the zone right here, I don't take my trades strictly off of the 60 range chart. I move down. It's called a scaled down approach. Moving down to a lower time frame, looking for rejection to take place, and I talk about that in multiple videos here. Basically, what I do is I then move down to a lower time frame chart, look for since I would mark a zone here on the higher time frame, look for a breaker structure, and then a demand zone to be created to take the market in the same continuation direction with the higher time frame. But in this case here, the market just kind of blasted through that zone, as you can see here, all right? And it actually breaks below this area of structure. So now your mindset can actually shift from, because we broke structure to the downside, from being bullish to now bearish because we broke below this area here at, say, 47.45. This here could be a demand zone. This here could be a demand zone right here as well. Why? Because we get a push down, pull back, break a structure, breaking this area here as well. Demand, excuse me, sorry. If I said demand, I'm sorry, guys. Supply zone, aggressive selling to the downside. Anytime we're breaking structure to the downside, we have aggressive selling to the downside, that's supply. This is a supply zone too. Now, when the market pulls back to this area, it breaks right above this supply zone here. But be mindful as well. I mentioned there's supply resting right here. So we can mark that zone, right? Let's go ahead and mark this zone. This is a supply zone right here. All right, and it's untested, high probability. What makes it untested, high probability? There is a void or gap back to this zone here. Understand that. Now, if we look forward to take an opportunity to go short here off the lower time frame, say for example, and we get the breaker structure, which occurs on the lower time frame, and then pull back to a key area supply on the lower time frame, because that's all it is. Supply on the higher time frame, okay? Aggressive selling. We want to move down to the lower time frame, look for a breaker structure, then a supply setup on the lower time frame, wait for the market to pull back to the supply area in the lower time frame, and then go short. In this situation like this, we have to be careful here because this is an area of support right below, because the market started breaking or re-breaking structure back to the upside, taking out minor areas of structure right here, okay? So this right here would be an area of support right below. So if I got into this trade right here on the lower time frame, once I saw the rejection, I'm going to unknowingly know that the market can come down and test this area here, because this would be an area of support right below. Keep that in mind. All right, so the market does reject this area, but I'm going to show you an example of what I'm talking about and break it down to you on the lower time frame so you can see. So the market then continues doing what? Comes back, taps into support right here, breaks off of it or rejects off of it and pushes higher. And then we get a break of structure. This is the major structure break to the upside right here above 48.31. Breaks higher. Then what does it do? Okay, so it goes up here. What is this? This is the 40 area. I talk about hidden pivot levels just in a previous video a couple of days ago. Those are levels that a lot of so-on trading gurus don't talk about in the videos. But most of you know about the half and round numbers, right? 40 and 70, I'm telling you now, when it comes to the indices, always pay attention and pay close attention to those levels as well, because the market likes to get to them and reject, okay? If you ever wonder why, and say, well, the market never actually tapped into a level, as supply or demand, but it rejected somewhere in between, a leg just in a general area, where there was no level resting at. Guess what? That could have been a 40 area. It could have been a 70 level, and the market rejected it. All right, and then what does it do? It turns around and it starts breaking structure back down to the downside. Took out this area here, took out this area here, and we broke this major low right here, or broke this low right here at 47.43. All right, and then it continues moving to the downside. You can see it breaking structure to the downside, okay? To the downside, right? Now, once it starts breaking structure to the downside, I'm going to go ahead and start looking for areas to mark on my lower time frame chart. My higher time frame chart here, okay? Sorry, not lower time frame. When we're moving lower, breaking structure to the downside, now we're looking for areas of supply, aggressive selling, right? When the market broke this area right here, this could be an area of supply right here. Back up here at and it's untested at 48.07, okay? But then the market keeps continuing running lower, breaks this low right here. Okay, once it breaks this low with a breaking structure to the downside, okay, we got a supply area right here. And this was on the ES, I think the 7th going into the 8th or something like that. So this was on the ES, and we're going to go down to that time period. Let's blow it up a little more so I can kind of really make sure what day this was. Let's see. This is the 8th. Okay. Maybe this was the close of. Actually, no, I'm sorry. This wasn't close. This was on January the 5th before moving into the 8th. So this must have been on the Friday. All right, so I'm going to blow this area up here, okay? Market breaking lower. Aggressive selling. Breaking structure breaking to the downside here, okay? We broke below this low right here. All right, supply zone right there. Aggressive selling. The market taps into it. Now what are we going to do? We're going to move down to a lower time frame chart. Simple. Just setup I'm going to show you. Let's move down. Let's go to January 5th right quick. Before we move down to the lower time frame, I want you to pay close attention to this, okay? I always talk about the market filling in some area of imbalances, back either to the upside or downside, depending on how it's moving. We're moving lower, so we want to see it start to fill in. The market has to correct itself. It's going to fill those areas of imbalances. It has to. I'm not saying it's going to do it immediately, but at some point it's going to fill in every area of imbalance, okay? All right, that's the way the market it corrects itself. So it taps into this this area of supply right here. All right. If the market rejects this, okay, I'm going to show you in a lower time frame, rejects this area, then we're going to be aiming for the low back down here to fill these areas of imbalance. You see what the market started moving back to the upside right here? Okay, well, take a look here. There are imbalances back to the downside that the market needs to fill. All right, this bullish candle to the upside, the next one, and the third one here. Look. When the market closed on that first candle, closed on a third candle, how far did it come back? It came back with that wick of that candle right there. And look, there's an area of imbalance left in between. The market has to fill that area, okay? The next candle here pushes up. Next candle pushes up. Third candle. Look, there's areas to fill here, okay? In between these candles here, the market has to fill these areas here. First candle, second candle, third candle. That's as far as it comes down, fills that area there. Next candle, pushes up. Second candle, third candle. How far does it come back? Right here. It needs to fill in back down to this area here. So the areas of imbalances in which the market needs to fill. Understand that. So if the market rejects this higher time frame supply zone here, then it's going to come back down and want to fill these areas. And if you notice it, what did it do? It came down all the way and filled it all the way back down to that area of imbalance that I was talking about and filled in both those areas. So now let's move down to the lower time frame. I'm going to break it down for you right quick. All right. So now that we're down on the lower time frame chart. So we want to see like the market break structure and then create a area of supply or a demand, not demand, but the supply setup. to the downside. So it taps into the higher time frame 60 range supply zone, right, off the ES. Moves lower, okay, breaking through small area structure to the downside. And now I want to see a nice supply setup. So it pushes down, pulls back, breaks lower. This right here would have been an area that I would have been interested in going short from. It's a high probability supply zone off the 12 range chart. It never comes back and taps into that zone. If you see, it breaks lower, breaks below area structure here, pulls back, tests resistance, and then continues breaking lower. So it didn't immediately come back to this area here, all right? But you can still look for and follow the structure of the market back down to the downside and look for, again, supply areas. And the key to it really is that you want to really take your trades back up to where the aggressive selling took place at, when you look at the higher time frame. So when you look at the lower time frame, the market starts running to the downside, breaking structure to the downside. But ultimately, yeah, you can look for, like, even here, like it pulls back, breaking structure to the downside here. There's a supply area here. You gotta be mindful taking it here, though, that the market can come back and test higher areas, because there are untested areas of supply resting above to where the market can come or retrace back to even deeper. So we got a break here, pushed up, break a structure below. It could came back to this area here, rejected and pushed lower. But look what it did. It pushed lower, and then it pulls back or retraces deeper just to test this area of supply resting right here. Okay, so once the market starts to reject an area of supply off of a higher time frame or higher base chart and starts moving to the downside, always be mindful of where the origination of the selling took place at, because that's where you want to really focus your mindset and your mind on to look trades going lower. Okay, I'm not saying once it starts moving to the downside and you've already sized up the area where it can definitely move down to, as we look here on the 60 range chart down here. We know it's going to test here, but this was the origination point here. Once it starts moving lower, I don't want to be caught up in the middle trying to take shorts going, continue moving lower. Yes, sometimes it does work out, but you got to be mindful. If there's supply zones on that lower time frame that it can pull back to, they're more, they can definitely test those areas before pushing lower to where you want to take the trade to. So let's say you got into this trade right here, okay, and then went short, right? All right, you're in profit, okay, and then the market pulls back, all right. Either you're going to lock in a profit, you're going to put a stop so maybe at break even so you don't lose any profit. But if you stayed into this trade here, say for instance, you got to this trade right here, okay, and it moves lower, and let's say you had your stop at the back end right here, it stopped you out, okay? You see that? So maybe you got into the trade at the break right here somewhere at 47.29, okay, somewhere in this area, right? Pulls back, taps into this supply zone right here, small area supply, and then you get to the trade, let's say 47.29. All right, it runs lower, but then it comes back and it stops you out at 35. All right, you lost a few points of profit right there, and then it pulls back even further than that. You have to understand what's going to take place there, because the market can definitely pull back and test higher areas of supply. So that's why I say it's best to try to get into the trade at the origination area. So if the market was to pull back, after it didn't maybe give you an opportunity to get into the trade, once it started running to the downside, look for it to pull back as close as it can to that origination point where the selling took place, specifically off the higher time frame zone, okay? Because eventually it's going to go down there. So what I did is I didn't catch this opportunity that specific day there. I took the trade right here because I saw the market push down, pull back, and we started moving lower here. And I noticed that this was a small area of supply resting off of this break to the downside here. So I waited for it to pull back here, get into the trade to go short, and it came on down to this area here. But I got into this trade on January the 7th when the market opened back up into the Asian session, is what I'm trying to say, because this was, a push down, a break lower, and you could take it from some area of supply within this swing right here, okay? Some small area where there's a, area of supply, again, within the swing. Now, what you could also do, I'll say this, is that using multiple chart confluence. So this was the higher time frame zone right here, okay? All right, show it to you again. 60 range zone right here, okay? We mark it off, see it on the higher time frame. You can mark supply zones then on the lower time frame. So maybe you didn't follow, this specific strategy of taking or looking for a short opportunity once it taps into the higher time frame and looking for, a breaker structure and then a creation of a supply zone to go short, which to me would have been right here, but it never came back to that area. Just kept pushing to the downside. Now, there's another type, something else you could do is this the higher time frame zone, okay? Now let's move down. We can use multiple chart confluence is what I'm trying to say. So we'll pull up the 24 range chart. This is this area right here, okay? That area right there. Now, this here is a supply zone as well. Let's mark this off the 24 range. 24 range. And it's still high probability too. Okay, so we'll mark that area there. What I'm going to do is I'm going to carry this over to the, on all charts. And then we're going to move down to the 12 range chart. Now we'll see both the 60, the 24, and we're going to mark up an area of, let's get rid of this here because we're no longer using that level or zone. Now we can mark off a 12 range zone as well. All right, so this is the red is the 60, the blue is the 24, and let's mark off an area of supply off of the 12 range. So this right here, this area here, supply zone, and we'll put that in. We'll mark that up as what? As green. We'll just do green. Hopefully it shows up. Okay, so you can see it. Red is the 60, blue is that 24, and then the green is the 12 range chart, right? So these are all supply areas. First, we're using and have a scale down approach of finding areas of confluence across multiple charts. In this case here, you can do it just on two charts there. If I use the higher time frame chart, just a 60 alone, then I'm going to want to possibly, I'm going to want to scale down to my 12 range, my entry chart, look for a break, a structure, then a supply setup, and then look for the market to come back to that area on the 12 range, which I showed you right here would have been a nice supply area to take a trade from, but it never came back to that area there. So what you could also do is mark multiple zones up. So we got a higher time frame zone on the 60, right? Okay. Then we can find a higher time frame supply zone, or excuse me, we can find a supply zone on the 24 range, which we did, moved down to 24. And then we also found a 12 range zone, 12 range supply zone, just as well on the what? On within the same area. So there's three zones here. 60 range higher time frame, scale down 24 range supply zone, and then a 12 range supply zone. And then all we're going to do then is just wait for the break and the close of the candle in opposite direction to do what? To go short. And if you waited for, and marked all those different supply zones from the 60 range higher time frame, starting there, moving down again to the 24 and then the 12, you got a cluster, a series of supply zones there. And when you get down to your entry chart, your 12 range, which I trade off of, and you get the breaking the close of the candle to the downside, that's that green zone right there, that supply zone right there, that green one, off the final chart, okay, as we're moving down, and we get the breaking the close of the candle in the opposite direction, meaning that last bullish up candle right here, blow it up for you, right here, and then you get the break and the close of that bearish candle below it to the downside, then you can go short, okay? And you can basically just, stay in the trade and take it all the way back down, moving back down to the, moving over to the higher time frame again, because the market's going to test and fill in these imbalances right here, okay? It's got to correct itself. And being that we really haven't, broken any significant area of structure back to the upside here, this is key right here. Once it rejects this area, it's going to come down here and fill these imbalances back down to the downside. And that's what it does. Okay, so, if you got into the trade again right here, then you just aim for it to take it back down again to the area around 15, which is filling in those imbalances off that higher time frame. It all starts with the higher time frame, regardless of the chart, and then moving down to throughout your series of charts. Again, you could use and mark it like I do a lot of times, just strictly off the 60. Then you can use specific strategy, looking for a break on the lower time frame, 12 range chart, your entry chart, and then a supply zone setup to unfold. Okay, looking for an area of supply to take the trade from on the 12 range chart going lower. But once the market starts moving away from the origination of the area of supply of the higher time frame, be very mindful of where it can retrace back to, because you got to follow price action. That's the key to it, is really following price action and knowing as it's moving lower, once it moved from that original a higher time frame supply zone and it starts to break structure to the downside, it can test and it creates supply areas, as it's moving lower, it can you know, it's not always just going to keep flushing to the downside when it taps into a supply zone and keep moving down. Like it did here, tap into a small area of supply, push down. It didn't come back here and then push down again. It went back up to test a higher area of supply, and it could test any area of supply that it wants to. It could have continued pushing higher, broke even higher, and tested up here. Had it did, then that'd have been nice, because now you're tapped back into the origination area of from the higher time frame where things started from, and then you look for that break of the candle to close in opposite direction to take it and stay in it going short. But in this case here, it didn't never come back and tap back into this zone until the next day. Okay, and at that point, it was already breaking structure back, breaking minor areas of structure back to the upside here. So, you know, using multiple chart confluence again. Starting with the higher time frame, moving down to another time frame, moving down to the lowest time frame you take your trades from, and you get that type of setup. It's powerful stuff. Okay, lots of individuals that trade similar to the way I do, and I talk about using multiple chart confluence and looking for those areas across multiple videos. You know, on my channel here, they trade very similar to that, and they will tell you if you come over to the Discord. They call it, you know, basically looking for clustering, and that's what it is. You're looking for a series of things to unfold from one chart to the next chart, and then when you get down again to your lowest time frame chart, boom, and it taps back into the 60, the 24, and then we're now at the lowest time frame chart, and we found a supply zone in this case here, and it rejects it. I mean, it's powerful stuff. You know, then you look down, then you go to your higher time frame to see where it could possibly go to. All right, that's the key to it right there. I'll show you a couple other examples. You know, yesterday was ranging. We're looking at the NASDAQ now, okay? The market was kind of moving sideways, but there's still areas or opportunities to look for trades. You know, if you take a look at what was going on here, the market was pushing higher, made a high, higher low, broke higher here. So we were moving to the upside, breaking structure, right? Then it comes back down, starts to re-break structure back to the downside. And then it starts doing some sideways action to where we started slowly taking out minor areas of structure back to the upside, took out this area here, before it started moving back lower. Now, we didn't break this low back here, right here below 913. This is where the market started ranging, okay, really right here. And you could trade within ranges if you really know what you're, if you really know what you're doing. Just got to be mindful that areas up here, these areas could be supply areas, because as the market was moving back lower here, it took out some areas of structure back to the downside. Then we started moving back up in between this low, or this low and this high right here. So now the market is ranging in between this low and this high right here. Hasn't broken above this area here. If we did, then we get a break of structure to the upside. Okay, and then maybe to follow suit and start breaking here, and then taking out this high right here, which is a major area of structure. It didn't do that. It started to range in between this leg right here, but we did start to break some areas of structure back to small areas of structure back to the upside within this swing right here. Now, here's an area, a trade that can be taken too. We're talking about using multiple chart confluence. Again, here, say for example, this setup here would have been strictly just off the 24 and 12 range chart, okay? Using two charts again. So in this case here, we have there's some individuals on Discord that I saw took this trade as well. Market starts breaking areas of structure back to the upside, pushes up, pulls back, breaks again here. Took out here, broke structure to the upside, break structure again to the upside. Now take a look at what happens here. This right here is a demand zone. This is a demand zone. The last one was a supply zone off the 24 range chart right here. All right. So right here, 24 range area of demand. The market taps into it. When it started coming back down, we didn't break any areas of structure back to the downside. So this is a solid opportunity to say, or to see that, okay, the market can reject this area and possibly come up here and take out the tops here of this high that it just made. But we have to be mindful too, because right above that area, the market tested it, and this is, resistance right above, right in this zone here. So it could come up here and just test the highs or break through it, but it's still a valid area of demand, because there's aggressive buying to the upside, pushed up, pulled back, broke structure to the upside, aggressive buying right here, demand. So we mark that on the 24 range as an area of slightly higher time frame demand, okay? Following structure off the 24 range chart. You can move down to the 12 range chart. So again, I mark that purple area on the 24 range demand zone, come over to the 12 range. This is the entry chart I want to take my trades from, okay? So when I saw that purple zone right there, Okay, let's mark this one here. We just mark that in, well, it's already in green. Okay, we'll leave it like that. You can't see that it's green, but it is green. So we'll pull it right here for right now. That purple area is that 24 range demand zone. The market pulls back into it. Again, when we're now down on the 12 range chart, we want to find confluence as well on the entry chart. If we look at what took place here, is there a supply zone set up on the 12 range chart? Yes, there is. There was a demand area on the 24, high probability untested zone on the 24 range. Now we got this high probability untested area on the 12 range, which is our entry chart. Once the market taps into that 12 range zone, it's tapped into the 24R demand zone. Okay, solid. Now it's tapped into, we found our 12R demand zone off our entry chart, solid. All we need to do now is look for the break and close of the candle in the opposite direction. Boom, this candle here, once it breaks above 61, or maybe you're a little aggressive and you got in the moment it started breaking above 59 or 60, get into your trade, and you can aim for the high up here at 73, okay? Aim for the high up there. Now, you got to pay close attention here because, look, there are areas of gaps that need to be filled here on the lower time frame. This bearish candle to the downside, the next candle here, and the third candle, there's a gap right here. There's an imbalance resting right here. All right, there's an imbalance resting right here. So the market has to fill that imbalance. Okay, even from here to down here, there's an imbalance resting right here. So imbalance here, back up to 65. The market is going to fill that area. You must understand. Even right here, that candle, that last bearish candle right here, broke lower. Next candle, third candle. Pay close attention to what took place here. I'm gonna show you right quick. Right here. All right. And it doesn't come back to the tick to fill every bit of that imbalance right here. Okay, small area right there. It's got to fill that area too. So if it rejects this area, it's going to aim for higher areas and want to fill those imbalances back to the upside. So whether you get out at 65 or you got out at 68 or 69, you're still solid. But be mindful, like I said, there is resistance resting right above us to where the market can reject from. But it did. It did take out the and ran the high right here at 73.5. Okay, so again, using demand off of a slightly higher time frame chart, and then finding that area of confluence on the lower time frame just as well, the 12 range chart. Okay, so multi-chart confluence, two charts here, taps into it. Basically what I'm trying to say is the more confluence you have when it comes to using pair charts, okay, the higher probability, the higher chance you have that trade setup is going to work in your direction. All right, so here's another example. I'm going to show you on the 24 range chart right quick. Supply setup right here. Aggressive selling. Taps into supply right here, right? Move down to our lower time frame. The 12 range chart, which is our entry chart. Okay, so the magenta purple area is a supply zone off the 12 range. Then we're just going to focus in and see if we can find a supply area on the 12 range right there. Let's see if I can grab these. Here we go. Okay, so this is going to be red because of the fact is I marked my supply areas on my lower time frame, or this the red means supply, green means if I'm marking or whatever the case is demand. But anyways, this is a supply area on the lower time frame 12 range chart right here. Okay, all right, so it taps into it. We look back at the 24 range to see possibly where the market could run down to. So it hasn't really broken any structure really to the upside back up when it taps into this 24R supply area right here. We look to see where it can run back down to. All right, and there's an imbalance resting down here as well. Okay, so when it broke above here, this candle here, second candle, third candle, when it pulled back as far as it came was right here at 52. Did it come back and fill this area here? No. So if it rejects here, it's probably going to come back down here, want to fill these imbalances back down to the downside to right around here at 49.5. Look what happens when it comes back down here. It hits that area, fills it in, and then it rejects, and then it pushes lower. So use that. Use the multi-chart confluence setup to just basically and easily get you into or guide you into a trade. It's as simple as that. I showed you examples of supply and demand on both sides, how to do this, how to kind of move down from chart to chart. All it is just scaling down, looking for supply on one chart, supply on another chart, just kind of where they merge together, okay, and come to some central location All right. And the more you have, the higher probability the setup's going to go or work out in your favor. That's what I want to share with you. Again, as this is a simple setup or guide to follow when it comes to trading supply and demand and the right way to do this. I'm telling you, this stuff is life-changing. If you trade it correctly, if you don't believe me, come over to the Discord and ask those that have perfected this and are profiting and watching their accounts grow. Again, if you're interested in joining the Discord, find that link down in the description portion of the video. If you're interested in gaining the additional content and gain access to the private community for $6.99, click on the join button. Find the link to become an elite member as well as down in the description portion of the video. There's two options. Click on the join button, and then you'll see two tiers pop up, the loyal channel supporter and the elite channel supporter. Become a member by clicking on the elite channel supporter, or find that link to both of those tiers as well down in the description portion of the video. Outside of that, that's all I have today to share with you guys. I do this. I keep talking about the strategy, because I want to see people become profitable. That's all I have. I appreciate each and every one of you tuning in today. If you're not a current subscriber, I don't know what you're waiting for. I would highly recommend you clicking on that sub button today and join the team here. As well, make sure you turn on all your post notifications, because I don't want you to miss any uploads. And drop a like if you found value in this content. I'm telling you, if you don't believe me, come over to the Discord and ask some of our community members. Take care. See you in the next one.